Hey guys, Mike here. So another interesting day in the market, and we're going to go over some big news about CPI. We're also going to get into Berkshire Hathaway, and they revealed something about a couple stocks, and some of you guys will be very happy if you own them because they are mooning and after hours. We'll go through that, and we'll go over what's to expect in the future and something to really watch out for just in case, because again, this move up has been on lower volumes, and like each and every day is just a mess when it comes to volume. And that's usually not a good thing. And so we're going to talk about that and really talk about why Berkshire Hathaway bought one of the stocks he actually did, which is a very popular stock. Now, when you look at it, we had CPI come out today. I know nobody believes the number. You can see it is heading in the right direction. Again, are we where we were before pre-pandemic? Absolutely not. This is where you got to get down to. Simple as that. When you look at where inflation is, this is why we hate it so much, because where inflation is something that affects everyday Americans, which is us, okay? Car insurance, got to help you if you live in Florida like I do. It's way worse than it is anywhere else in the country. Hospital services, rent, electricity, you name it, right? Food away from home, meats, poultry, fish, and eggs. And that's why you're like, dude, inflation, there's no way it's where it's at. Well, remember, there's a many categories. And if they don't like the numbers they get, they just change the way they calculate it. Now, look at month over month, see the exact same thing, okay? This has to change, okay? And this is why them cutting too early can be very dangerous when it comes to inflation. So, again, be careful what you wish for. And one of them that has to change more than anything is really the rent. Now, this is old data. The way they collect this is archaic, calling people, getting surveys and stuff. Nowhere near pre-pandemic levels, you can see right there. I mean, it needs to be almost cut in half to get down there. And so, again, a lot of this is old data, but still, this stuff's kind of stuck until the housing market in general is fixed. That's just the way it is. I mean, I had a neighbor rent their house out for like $2,800 for crying out loud. And easily that thing would have rented for $1,700 pre-pandemic. And so that kind of shows you the difference in what's going on, okay? So I feel the anger and everything and what you're talking about when people say there's no way inflation is where they say it is. And in a lot of different categories the Fed does, it is not. Now, we talked about on NQ how we're going to come down probably, grab some liquidity hopefully, and then move up from there, and that's exactly what we did. You can see it right there. And look at the wicks on this candle, man. That's the kind of stuff inflation data or big red folder news can do to you, right? And so, you know, looking at this right here, when you look at it, also we took that liquidity. We're coming up into that big fair value gap we talked about. And there's one thing I want you to be very aware of. Like for me, I'm just marking out the top of that big wick right there and the bottom of the wick on the candle to the right, as you can see. Okay, and so hopefully you can see those trend lines right there. And if we take out the wick to the top, or the trend line to the top, obviously we're going to move up in that fair value gap, which is what a lot of people expect, especially when you see what the SPY actually did today. But if we take out the bottom one, that's going to open up that larger wick right there down. And if we take that out, be very careful, because you know some people think this is going to be a bull trap, right? Where if that happens, then it opens up that major liquidity setting to the downside. Okay, and that would be a big drop. So I'm saying it's a big if. Okay, if this is a bull trap, because now, as you're going to see, we did close like right on the 50 moving average. So I'll show you for the SPY. But again, and so would a lot of people like that? Sure. Can you see it in this market? Absolutely. I mean, this thing, there's so much volatility right now going on. We got so much news coming out. Again, what was the big fear? Oh my God, it's going to be a global recession, all this fun stuff. And you'll see all the data we got coming out tomorrow, and it is in abundance. It's the most news I've ever seen coming out in one day to begin with. But again, there is that huge fair value gap that we've been moving in as we've taken the rest of the liquidity we've already talked about. And you can see I never use moving averages on the futures, but we're sitting on the 100. That 200 lines up right with that liquidity as well. And again, the 50 is above that fair value gap above us. So, you know, they could absolutely push us up. Now, to get this on the SPY, you have to go where it says extended trading hours, right? And you can see it's right there. So if you're trying to like map this out on the SPY, like where would this be? That's where it is. And it'll be, you know, 3% drop, which really, if you think about it, that's not a big drop. But I mean, look how fast we've moved up. But again, just making you aware of it. Now, I'm not saying it's going to happen, okay? But understand all the data we got coming out tomorrow, right? Core retail sales month over month, unemployment claim is going to be the big one. And just look at all this mess. I mean, FOMC speakers, industrial production, all this stuff I don't expect to move markets. It may move it a little bit, but it's the news in the beginning that's going to move it. But it's just, I mean, like every hour on the hour, some kind of news coming out. And then Friday, nothing much to speak of, okay? Which is kind of strange. But you can see what the SPY do, right? Again, another check mark. It did close above the 50 moving average. Okay, so we got above the 100, above this, close the gaps, all that fun stuff. You can see all day it just traded around it all day long. I put a support line right there and just said support resistance line and said above it bullish, below it's bearish, right? So you can see every time it broke above, you got some nice big pops if you wanted to play them or whatever. And they really didn't get a whole lot to the downside after around probably 1. But again, you saw what happened when we rejected this morning. And so you go to the smaller time frames, it just sold right off immediately. And so rejections off this, normally, like I told the members, I normally never look at major moving averages for trading until I know there's one that everybody's looking at. And then I look at it and I kind of just pay attention to it and see when we get rejected, probably going down. If we can get above it, you might get a nice pop and stuff. But the one thing you might have noticed was S&P was way stronger than NASDAQ. Why? Because XLF, which makes up 15% of the S&P, led the way today. That is rare. I can't remember the last time I told you guys XLF was leading the way. But look at the other ones. Energy, right? XLP, XLI, right? These are categories that are heavily in the S&P, and so that's why you saw the S&P was pretty much green all day long, except for one big push down in the morning, and then the Qs were not. They finally pushed it up in the last 5 minutes of the day to get it green, and now as I look at the futures, they're trying to push it up in after hours, right? Now, looking at Ulta, for those who own it, just FYI, you might want to look at your account, right? Here's a nice, FU candle, whatever, and of course, so I think it's 13% up. And so you will look at your portfolio tomorrow and be happy with that if you own it. And of course, this is a Berkshire Hathaway candle. Every time they do this, they bought about 600. And of course, this is a Berkshire Hathaway candle, right? Because when they reveal what they've bought or sold, these are the kind of candles you get. And you can see they bought 690,000 shares of Ulta Beauty right here. And you go, well, why did he do that? You know what? Because it got down where he felt the valuations was better when it came down 43%. That's why. It's just been meandering here, doing nothing, looking just absolutely a mess. And so he said, hey, we like it. He likes to buy stuff on discount, on sale. He believes that's where it needed to be, and that's where he picked it up at, right? So we'll see if he adds any more to it. But that's what happened there, okay? So congratulations if you own Ulta Beauty. Now, crowd. Prime example of another one, been beaten down, right? So what are people doing? They're buying it, okay? Where's it at? Where did it get rejected today? 20 simple moving average, okay? So we'll see if it can get above that. All right, again, it also filled this gap to the penny. So you got confluence right there for a stoppage, right? 20 SMA plus a gap fill. That normally happens. That's completely normal. And when you look at this one right here, I mean, again, we're going to put some fibs up here on the retracement back up. You still, I mean, this thing was down so much. You still hadn't hit that major fib above. You did get above the second one there, as you can see. What we'll do is go to a shorter time frame, and you can see, right? This one right here has been trying to come up, basically run up just like a stock should, right? Building out structure, retesting the level, okay? So we could see a pullback down that fib level, moving up, right? And so that's what you want to see, not a straight up candle or whatever it is like you saw on Ultra right here, which we'll have to digest that again. So don't be surprised if you see a pullback once all this news phase. That's what usually happens on news candles. But again, when you look at it, it's been a 29% move, okay? Buyers have been stepping in. It's been so damaged. The bulls still aren't in charge, right? They still haven't got the RSI above 50 right now, not even really close to it. And when you pull at the moving averages, the dailies, you're still way away. I mean, look at that. There's the 200, the 1500 are way up there. But that's what happens when a stock drops almost 50%. You got to bring up the weeklies for crying out loud. And again, the first one that's going to hit is that 50 weekly moving average. It looks like right there. So that's still going to be right there with that. Fibonacci level is, again, it moves. It's a moving average and stuff, but just keep an eye on that because those are going to be resistance going forward, right? You've seen this on the way back up on the Qs and the S&P, right? What's happening to moving averages? We keep getting rejected. We come back down, finally power through them, right? Unless there's some crazy news event or earnings that pushes it through, it's going to be a grind up through there, right? You've had the big pop because, again, I always say pay close attention to stocks like this, how the market's performing, how these are performing. Right now, these are outperforming the market, right? They're going up when others are going down. These are outperforming the Mag 7 right now, right? Snow's another one. And you can see where they're going to start hitting that, right? Here's the 50 moving average for Snow, sitting around like 128 right there. Again, the 200 for CMG is around 53.85, it looks like. And you see right there, it got rejected. And finally, once it breaks through these moving averages, you get a nice pop, right? Right here on Nike, around 80.93. That's where you're going to have it, right? Right here at 283 around for Lulu right there, which is a hot mess, by the way, the 50 moving average. I mean, this one's a mess. This is the one, you're hoping it builds out some base, starts to move back up. Again, not much love for it right now. Disney, way off from its daily moving averages. You got to start pulling up weeklies to see if you can even pull up, like, when's the next one going to hit right here. And it's got some gaps to fill, whatever. But again, there's your weeklies right around 95.77. It's 2 of them sitting there. Okay, that's going to be resistance. If it breaks above, you'll probably get a nice little pop on it, right? Now, Shopify did make it above its 200-day moving average, closed above the 200-day moving average, did not get the pop I liked, I guess because of what the market was doing. I don't really like that move very much. But again, you know, when you look at it, it is above the 200s, and now it's above all its moving averages. And so if you look back in the past, which I like to do, what happens, this doesn't count because it was an earnings gap above the 200. So, of course, it had crazy momentum. But when you look at other times, just try to get above the 200. You can see it kind of came up, maybe a little retest, grind its way up into that gap right there. Again, here, failed. And so, you know, this is the way I kind of look at it. But the one thing somebody pointed out, be careful on this one, is you can see that gap fill and then this happen. When you look at a larger view of this, and one of you guys point out in the comments, and I appreciate it, it looks like a massive head and shoulders, right? So, and where would the top of that shoulder be? It'd be almost maybe $2 above where it is now, maybe $3. And so don't be surprised if that plays out. Again, I like to bring this up to you. You can do what you want to with the information because these don't always have to play out, right? It can power right through and the market all of a sudden starts going crazy or whatever. And then boom, it participates. Or you could see this pull down, okay? Now, when it comes to earnings, you're going to get to hear from Walmart. If Walmart reports terrible earnings, man, then that whole recession fears are going to pop back in because it should be good because it should, they sell consumer staples, right? And then you'll have Baba, JD.com, John Deere, which I don't expect anything good out of, and then Applied Materials, which is another semiconductor stock, if I'm not mistaken. And so, you know, we'll see what tomorrow is going to bring because obviously we got a boatload of news, some very important news, and you got to see how the market is going to react, right? Is the recession fear still gripping? Is that what's really moving this market? Because the jobs data reports are kind of like what inflation data used to be, right? Like super critical, right? And so have we laid off more people? Or was it just an anomaly when storms were hitting everywhere in Texas and everything and other parts of the country and people were just out of work? That's what we got to find out, guys. And so we'll find out tomorrow. Just watch how the market reacts off that news. Again, usually the initial reaction is not the real reaction. But this is a super volatile market. You saw the VIX getting crushed today. So it is below 20. And so maybe we start to see some downside, you know, decreased volatility and stuff. We'll have to find out. So anyway, please hit that like and subscribe button if you got anything out of this. I really appreciate it. And I'll see you guys tomorrow.